What's good on my stock market homies? It's your boy Kevin. This is Touchdown Trades. The stock market is in the weirdest position that I have ever seen, and we're going to be talking about it all in today's video. We made new all-time highs in the S&P 500 today, hitting highs of 441.85. It doesn't matter what is thrown at the stock market. Pandemic, everybody's getting sick. It looks like the world is falling apart. No problem. Stock market recovers like that. The government injecting itself into the economy and the stock market, no problem. People are laid off, unemployed, no problem. Stock market makes all-time highs. Today we're going to be talking about why I think this huge run that we've seen in the stock market is not yet over. We still have a little bit more to run. We're going to be talking about my personal plan, how I plan to make some money off this crazy stock market, and we're going to be doing some technical and fundamental analysis, talking about the general dynamics of the market and where it's headed next. So you're gonna want to stay tuned. Before we get started, everybody go down there, destroy the like button for me, because remember, the like button is not our friend and we must destroy it. I got the S&P 500 chart pulled up on the screen, and look at this run. If we back off to a monthly chart, it looks like a freaking penny stock. It's gone absolutely crazy. It's gone to the moon. I'm not gonna lie, I've been stalking a short trade on the S&P 500. I thought the run was over. If we go back to a daily chart, if this thing will load, my internet's kind of sketchy right here, we'll talk about my short trade and why it didn't work and why I ended up losing some money. So I thought the market was extended back here. I thought the market was extended back here. I thought the market was extended back here, and we still got this big move. We made money in this region, but I was looking to get short up here. We had this bull flag forming on the daily chart over that prior resistance, which was acting as support, but I thought the market was just too extended, and I didn't let the actual fundamentals impact the trade. I tried to look at the chart and use the chart to plan the trade. But here's the problem with that. A chart is just data. A chart is just history. And we are in a time like never before. The stock market has never experienced what it's experiencing today, and that's why the trade didn't work, and that's why I think the stock market will continue going higher for at least the next month and a half or so. Reason number one, this market is absolutely crazy, is because we have seen an influx of retail traders come into the stock market. New money coming into the stock market is a great thing. It'll send, there's more buyers, the market goes higher. As more money comes into different stocks, those stocks go higher. But here's where it gets crazy. The government's just throwing money at people. They don't know what to do with it. They're sitting at home bored, so they start throwing money in stocks. That has helped to drive the price higher. Number two, we have the Federal Reserve propping the stock market and economy up. Extremely low interest rates. The Federal Reserve is printing money left and right. We also have an eviction moratorium. People don't pay their rent, they get to stay. So people aren't paying their rent, they have extra money, they're throwing it in the stock market. It's just a perfect storm of the government getting involved in the market, getting involved in the economy, and it has helped to blow the top off this thing, and we're seeing this stock market go to the moon. 46% of every dollar that was given out via stimulus went into the stock market. That is absolutely insane. We're talking about billions and billions of new money coming into the stock market. The eviction moratorium, it is the craziest shit I have ever heard. We're open back up. You don't pay your rent, you get to stay. I heard a story on the news the other day. This guy was renting an apartment from a landlord. He ended up moving out of the apartment, subletting it, and collecting rent. The tenant was collecting rent because he was subletting the apartment. He didn't pay the actual owner of the property any rent, and he was collecting rent. That's the kind of sick stuff that is going on in this economy. So just to make a long story short, I do think this stock market is overextended. I think it's too expensive, and I think we're going to see a vicious correction in the next couple of years. But, big but, I don't think it's over yet. I don't think this run is over. I still think we have a few more weeks of blowing early shorts out of the water. Early shorts are going to get crushed, and then we're going to see the actual correction. You can call it a crash, whatever you want to call it. But as we look at the 30-minute chart, this thing is setting up for another move higher. We had resistance up here in the 441 range. We broke over it today, closed over it, which is a good indication that we are going to get the next leg higher. So my plan and what I'm going to be watching for is a explosive move higher. We call it a volume top, where you get 2-3 days of just increased volume, a big move to the upside, and then I'm going to look for the rollover and the correction over the coming months. It just can't continue. The put to call ratio is something to keep your eye on to predict when the crash is going to happen. Right now, there's still more puts in the SPY than there are calls out there, meaning that more people are betting on the market to go down than are betting on it to go up. Once that gets about even, I'm going to load the boat with some put options on the SPY and look for the crash. The Rona crash was one of the greatest opportunities that we will ever get to see in the stock market. Buying those stocks at extreme discounts, it may never happen again of that nature. But we're also gonna have a great opportunity to ride this craze back down to earth, because don't get it twisted. Right now, we're sitting on the moon. These valuations make no sense. Don't get me wrong, Apple is a great stock. It's a great company. But a valuation of $2.4 trillion is absolutely outrageous. I remember when Apple was approaching that $1 trillion market cap level, and everybody was losing their mind. Everybody was saying that it was too expensive. And a couple years later, we're sitting at around 2.5 trillion. So it's more than doubled since that time. But I'm calling this valuation too expensive. I think it's outrageously expensive. I'm not saying it's not a good company. We all know Apple's a good company, but I am saying the stock is too expensive. If we look at the stock too, it's kind of disconnected from the S&P 500. We have this flag forming, and it's kind of bearish looking in my opinion, like we may roll over. Also, we have companies like Facebook that are too expensive in my opinion. Microsoft too expensive. These big blue chip companies are just flat out too expensive. Sure, we had stimulus injected into the economy like we've never seen before, but that money's gonna come to an end. People are gonna be dependent on it, and when they don't have it, what are they gonna do? They're gonna take the money that they invested in the stock market, they're gonna pull it out, and we're gonna see a mass exodus of retail traders once the direction of the stock market changes. And I know I've been rambling this entire video, but I just think the dynamics of this market are crazy. We've never seen anything like it, so I just wanted to document my opinion on where I stand and my plan. My plan is to short the ever-living hell out of the S&P 500 once it's time. Once we see those blow-off candles, I'm going to jump in short via some put options, and I will be sure to tell you guys once I enter that position. I love you guys, and I'll catch you in the next video. Until next time, deuces.